Okay, welcome everybody. We're here for Ticker Talk today. We are going to take a look at the markets as we always do, and we'll take a look at some of your favorite stocks and tickers. Let's get right into this. We'll just quickly go through our disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here today are my own personal opinions and not to be considered advice to buy or sell any security, and all trading and investment decisions are your own and done at your own risk. I'm Kevin. I think everybody knows who I am, but one of the things it doesn't say here is that I like myself a good beer. And now that we're doing this later in the day, I don't feel like I can't have enjoy an adult beverage. So if you're enjoying an adult beverage too, cheers. This is a nice. Oh, it disappears in the. That's unfortunate. This is a nice IPA. It's called Foghorn IPA from the Main Island Brewing Company. A really awesome little microbrew, and this is a very tasty beer. It's got that nice hoppy taste and a little bit of sweetness too. It's a really interesting combination of flavors. I really enjoy this one. So you may see me sipping on that through the session here. All right, let's move on and go ahead. Go smash that like button if you're watching the recording. And so, of course, yeah, we're going to look at the markets. We'll look at the major indices. We're going to look at the volatility index and yields and the dollar index. We'll look at some sectors, and we might even find a setup here and there, I think. Let's just dig into this. And once we, so we'll just go through the markets quickly, then we'll get into taking a look at your tickers. But we always want to, have the context of what is the market doing? Anytime I'm scanning stocks, I want to take a look at, what the market's doing, what are the sectors doing, and it gives you the context of what your individual stock might be doing as well, right? For instance, like today, you can see the S&P 500 had what we call an inside day because it's inside the range of the previous day. We did close a little lower than we closed yesterday, so we've made a new 52-week low today. But again, it's still, or no, sorry, we didn't make a 52-week low, but we have a 52-week low close. But this should have been expected for today, and I actually thought yesterday would have been an inside day as well. We've got a really big event coming tomorrow with the CPI, Consumer Price Index, the inflation number. Everybody's waiting for that. So that we chopped around and went sideways today doesn't surprise me one bit. And if we look at the intraday chart on the SPY, we'll look at a 5 minute of that. You can see just choppy, right? Choppy sideways, kind of a nothing day. If you were trying to trade in here today, you probably got chopped up quite a bit. It was just messy. So that's sort of where we're at now, waiting for the CPI. I think that we are pricing in a lot of downside right now. And I think that while I don't expect the CPI to miss, to come in lower than expected, I think if it does, we could see a really nice rally. But I don't think the market is expecting that. And in fact, if you look at, let's take a look at, we'll first look at the expectations for CPI. So the CPI, the regular CPI month on month, is expecting tomorrow to be 0.2%. Which is actually higher than the previous month. If we look at the core CPI, we're expecting to see that come in at 0.4%, and the previous month it was at 0.6%. So the core would be coming down if it comes in at expectations. And then the CPI year on year, this is the number that you usually hear in the media. It's the regular CPI year on year, and it's also, people call the inflation rate. This is expected to come in tomorrow morning at 8.1%, which is, down a little bit from the previous month. So I would say, if we come in, at 8.1, I wouldn't be surprised if we rally a little bit. If we come in under 8, I think we'll have a huge rally. But it will be tempered by the fact that the Fed is now talking a lot about how they need to see the employment situation change. So, take that for what it is. And you can see that that happens at 8:30 Eastern tomorrow, an hour before the market opens. So that's the CPI. And then going into this, these are the expectations for the next rate hike. So the next meeting is about 2 weeks, or just over 2 weeks from now, I think. Or is it 3? No, it must be 3 weeks from now. No, yeah, it is 3 weeks now, on November 2nd. You can see here, this 84.8% is the expectation, or the probability. This is what the bond market is pricing in for the hike at the next meeting. This is the 75 basis point hike. So pricing it at 85% probability of that, and only a 15% probability of the hike is only 50 basis points. So this is what the market is expecting moving forward. I always like to be aware of where this is at before we go into any really important numbers like the CPI, because you will see this change if the CPI comes. If there's a big miss to the downside on CPI, if it comes in a lot lighter than expected, then we'll see these probabilities change. We'll see this probability of 75 basis point rate hike come down, and the 50 basis point rate hike probability of that would go up. Okay, so that's kind of the macro situation for tomorrow and really the rest of the week. And also, yeah, earnings season is kicking off now too. Kind of starts a little bit tomorrow, but it really kicks off officially on Friday morning with a bunch of the big banks reporting. So that's where we're at. So, if that number comes in hot, we're obviously going lower. I'd be surprised if the 352 support holds. I think we go even lower than that. And I'm not sure where our next support level below this 352 level is going to be at around 342. So yeah, a miss is going to send us lower and probably over the next week or two test that 342 level. So the NASDAQ. Yeah, that is so good. So the NASDAQ is right at support. Just hanging on by its fingernails. We're going to see a lot of the charts we look at. They are right at support, hang on, by a thread. Again, this is all depends on that CPI number, and I don't even have any more support marked in on this to the downside. I mean, maybe there's something in around 247, or here, perhaps here. Down another 10 points, perhaps. Maybe we should get something in there. But I mean, it's really the support. Oops. It's supposed to be. This is not a very strong support level by any stretch of the imagination here. There we go. It probably gets a little bit stronger, off of this pivot here, which is down into the 230s, right? That's nasty. So yeah, so we really need to see a decent CPI number here, because if we start seeing more downside in the indices, it really starts turning into a bit of a plunge, I think, unfortunately. IWM, the Russell 2000 small caps. Again, I might need to mark in some more levels on this. I'm not going to do that right now, and hopefully I don't need to do it on the weekend. This is, the small caps have been performing a little bit better. They've been outperforming the other indices a bit, but you can see we're, looking a little bit weak in here. Does have some, some buying wicks on those candles, kind of indecisive looking, really. And indecision right now shouldn't be a surprise with this really important number coming. Oh, I forgot to mention though, actually I got to go back to the SPY because this is interesting. I want you to notice this RSI divergence. Now I pointed this out, I think in the last ticker talk. I know I pointed it out in the last weekend update. we're putting in lower lows and lower closes here. Okay, but the RSI is actually moving up. The RSI is putting in higher lows. That's a divergence, and divergences in these indices tend to work really well. So this suggests that we're about to see a reversal. It's not a guarantee, but it is something to give us a little bit of hope here that we don't completely break down. So yeah, so we're seeing this in the SPY. And we're seeing it in some of the sectors as well. All right, let's move on and look at the volatility index. The volatility index has moved up. It's broken out above that downtrend line, so we've got to adjust this line now. Bring it over here, something like that. And you can see that we are stalling out a little bit just under this sort of adjusted trend line. You can see just on this piece of the chart, you can see that volatility, when it gets up here, doesn't really stay up there for very long, right? And if we go farther back in the chart, this here is the COVID spike here. But even when you look back in the chart, if I just throw a line on here, here with this, just make this a little easier to see, kind of what that level is. You can see, we can spike up through it or to it and usually turn around right away. Now, in COVID, that was a bit of a different story. But since COVID, again, really doesn't spend a whole lot of time hanging out up there. So no reason to expect we wouldn't see the same, right? So when it spikes up and then comes, crashing back down, these crashing back down, that's the market rallying, okay? You can see here when we came down, didn't crash down as hard, but that was our June rally right there. You can see we came down pretty hard here, and that was the recent rally. So this is another thing that's kind of saying, hey, this could roll over here. We should be looking for a reversal here. It's just another clue. Now, I don't want to get super bullish or anything. I don't think you should be getting super bullish, but there are signs that we're ready for a rally. Maybe we're even ready for a real bottom. They're just very early signs, very tentative, but they are out there. The 10-year yield. The 10-year yield has been creeping up right under that former uptrend line. That uptrend line is acting as resistance. It's kind of holding it back from going up any faster. And you can see we've come up to that pivot, that previous high, and we're unable to get through. We put in a red day on the 10-year yield today, which is nice to see after this many updates. Really nice to see that roll over. This has got to roll over if we're going to see the market rally. Let's move on to the dollar index. The dollar index, you can see the momentum is slowing here. We had that big bounce, very bullish pattern here, followed by a big green candle. But that is slowing, looking like it could potentially roll over. But this is a very indecisive looking candle that it's put in here today. But again, we need to see this dollar index roll over if the market's going to rally. All right, let's move on to some of our commodities. Gold and silver, copper, nothing happening there. Even the general commodity index, it looks just like oil right now. So I'll skip that one. Let's go to the agricultural commodities. We had talked about this bear flag that they've been putting in. It tried to break out the top of that, and that failed, and it's come right down to the bottom of this flag. Again, sorry, there's a little mosquito in here. It looks like this is gonna, probably break out the bottom of this flag now. So that's not great if you're in any of the agricultural space. All right, so move on to crude oil. So you can see crude had been in this downward channel and it broke out. I think that was on Friday. Yes, Friday. It had that big green candle, broke out very nicely out of that channel. I remember mentioning on the weekend video how I wanted to see it come up and consolidate up here. Well, you know, proving that you don't always get what you want, it rolled right over the very next day, started rolling over, and it's pulled right back. It went through the first level of support, unfortunately. However, it's not down at the trend line that it broke out of yet, so that's nice to see. It also seems to be finding some support at the 50-day moving average and the 21-day moving average right there. And there's also another, you know, horizontal support level below that at about 85.50. We need to see this turn up right away. Too much testing going on down here, not a good thing. It'd be nice to see this turn up. I'm fine with it hanging out under the resistance right there. But I don't want to see it spending too much time down here. I want to see this turn up. Giving me hope that it will turn up is are some of the energy ETFs. These ETFs hold the companies, not the commodity, right? And you can see that these candles look a little healthier. Nice green day today in XLE. You know, we did have the move down, but didn't even come down and touch these moving averages or support levels or anything before it started moving back up again. So that is hopeful. The energy companies are starting to move up before oil. So that's a good thing to see. That's a pretty bullish sign for our energy companies. XOP, oil producers, this looks pretty much the same, right? Came down, found support at the 21-day moving average. It's not filling this gap in. Be nice to just see that turn away and move up towards resistance there. And same goes for the oil services ETF. Looks very similar here. Natural gas. We have been watching this sort of downward sloping bear flag here, expecting this bear flag to fail. And you can see we've spent actually the last few days down at this horizontal resistance level. Hasn't even come down to the bottom of the flag, so that's good to see. So this looks ready to make a turn up, in my opinion. TAN, on the other hand, the solar ETF. This thing has just turned into a disaster. And it's coming down and breaking down through. You can see it's broken down through, or trying to break down through, the bottom of this channel. We don't want to see that. It is broken down through this important horizontal support level at around 68. So not looking good here. And a nasty red candle today, closed right on the lows. So I think we can expect some more downside. I wonder though, I mean, we've got these two lows right here. And I should probably draw that in as a pivot. These could act as support. So it may be that we see one more down day, come down to, that's in around 65, 75, say, and then maybe stop and turn up. But that's definitely our next, the next spot we'll be looking for, you know, to see if we can find some support there. Some of the solar companies we watch closely, FSLR, First Solar, you know, it's got this nice, it had this nice consolidation. It was trying to break out the bottom of that, but look at, buyers come in every time it breaks down below there. Buyers come in. Maybe not so much today though, but this is still supporting. So that's, you know, that's a little hopeful there. And ENPH, we had been watching the head and shoulders pattern there. We had that big breakdown. It's come down. Momentum, it's slowed a little bit over the last few days. Except today, the momentum, downward momentum picked up. So, you know, we are, though, supporting right at the 100-day moving average. This may need another down day or two. You know, come down to the target, perhaps. Could even come down and completely fill this gap here. Yeah, if I was going to be anywhere in this space, I'd rather be in First Solar right now than ENPH, but I'm going to watch ENPH closely because this is a leader in the space. And when this turns, it'll probably turn quickly and have a really nice move. So hopefully we'll see that and be able to warn you that that's happening. Discretionary, I don't think there was much going on there. Consumer discretionary, I don't think we need to say anything. Yeah, coming into support, that's about all that's going on there. Industrials. hanging out above that this gap that goes way back into last year, sorry, 2020. Still hanging out above that level. Finding some support. You know, this will support. If the CPI number is good, this will turn up from here for sure. If not, we're probably going to come down and test some of this gap, you know, test the support down here. So that was our industrials. Okay, financials. Now, as I mentioned, earnings season starts on Friday morning with the big banks reporting, and financials are at an extremely important support level. Really, they've kind of come below it, right? But they're not, you know, crashing below it. So this support is holding, but again, you know, hanging on by a thread right here. If, you know, these are going to move with the market, but maybe not as much as the market, because we have earnings on Friday morning. And so if there's a big move because of CPI tomorrow, these may not move as much or even the same way as traders are preparing for earnings coming. And what have we got? Yeah, as far as support, there's room for, you know, there's a good 5% downside in this till the next support level. And 5% is a lot for an ETF. Okay, it's technology. We've got to look at technology. Continues to be a disaster. Continues to make new lows. We had that pointed out that island reversal last week, and you know, nothing good ever comes of that. You can see, you know, we gapped down. Well, the gap down is what creates the island reversal here, right? And just have continued lower since then. Did print an inside day today, just like the indices did. So that's good to see, but it's still an ugly day, and it's still put in a new closing low. Communications are very similar. You know, they're continue to put in new lows. We had a support level here. It has failed, and it even kind of failed the retest today, didn't it? You can see we broke down through there, tried to come up to it, and failed at that. But indecisive candle as we wait for a CPI. Let's look at our FAANGs really quickly. So Meta, you know, this is one of the biggest disasters in this market, in my opinion. Just continues to go lower. It's coming into a support level here. How far back does the support level go? Oh, yeah, way back. Oh, this is with that 2016. Yeah, this support level originated in 2016. If that doesn't hold, oh my geez. You know, look out below. So don't want to have anything to do with Meta right now. Apple's still in. Oh yeah, that's right. Over the weekend, we were worried about this downward channel accelerating. It looks like the original, because it had broken down through there, and then it didn't go up to the top of the channel on the next touch. But it looks so far that original channel is holding here. So that's good to see. Do we find support at this pair of lows right here? We really hope we do. You know, because more downside in Apple is not something we want to see. Amazon. Amazon trying to, you know, we're trying to hold support really. I mean, it kind of broke down through there yesterday, went down through again today, but it is holding for now. Again, important support level, because if this breaks, we probably come down and test these May and June lows. Netflix, yeah, even Netflix is having trouble now. You know, we've been waiting for this to go up and start filling this gap, right? And they've been putting in some nice consolidations in here. Well, the last one has broken down. But we do, you know, it continues to find buyers every now and then, right? Even when it breaks down through support levels, you know, so now it's found some buyers at the 100-day moving average. We had a good candle today, up, 3% today, you know, on a day that, you know, the market was down. So not bad, you know, we got to get back into this range here though. And, you know, ideally putting the consolidation up higher, and then we can start attacking this gap. Google. So Google getting very close to testing these lows and this gap that goes way back. I can't remember how far below. Yeah, support's a ways below. Support around 91 and 85. So obviously we don't want to see that breakdown. Microsoft is looking soft as well. That actually broke a support level this week. Yeah, that's not good. Where's our next level on this guy? Probably really the next, decent level is probably in around 212 to 210. So yeah, I mean, this CPI number actually here, there might be something here. Let's put that there. I don't know that that's a major support level though. 216, 217 would be the next level to look for on Microsoft. Yeah, I mean, we need the CPI number to come in good so that we can rally off it. A lot of these stocks really need to rally right now. Tesla. Tesla coming in to test the support level. They had a little bit of a green shoot today, though. Did finish green, yeah, finished slightly green. This, there's a little bit of hope in that candle. The semiconductors are sitting right on support. Again, hanging on by a thread, like so much other stuff that we've looked at today. AMD, interesting 3 days in AMD. Look at this. These three almost identical dojis here. Today didn't have as tall of a selling wick on it, but that's really interesting. I don't think I've ever seen seen three almost identical dojis in a row like that. And I really wonder if there's a Japanese candlestick pattern for that. But I bet you it's super uncommon. It probably be really hard to backtest for something like that. But yeah, I find this really interesting. I mean, it's a nice consolidation. It finds, every time it sells, it finds buyers. But every time the buyers come in and take control, well, the sellers come back, right? So that's, the cause of this pattern. For this to go on 3 days in a row is really interesting and really unusual. Let's see. Let's take a look at XLD Healthcare. Finding some support here above its lows, above those June lows. So that's good to see. But again, kind of hanging on thread. XBI biotech coming in a little bit of support. We were looking at Head and Shoulders. It's trying to hold, but if this little pattern here can't hold, if it can't hold those lows, don't hold much hope for that. It probably comes down to test this target. REITs continue to be a disaster. However, they are holding at this really important support level. The support level goes back to, I mean, this started as resistance back in 2017. It's a really important level here for this to hold. XLP, Staples, not looking great. Tried to actually, no, these did have a decent move the last couple of days. It's not great because they're just so close to the lows, right? And there's a lot of air below. But yeah, this is sort of a bit of an interesting rally in these up to resistance and failed there though. And utilities for some reason were down huge today. Utilities were down 3.33%. This big red candle on this. I mean, this is really surprising to see utilities coming down this much because this is the defensive sector. This is where you're supposed to go to be safe in a bear market. Although, I mean, these things can come down, but they usually come down a lot slower than the market. And you get in these things, you get in them for the dividends and whatnot. So this is a really big move down in this, and I'm not really sure what's going on here. I don't understand the reasoning for it. It's something I should probably research a little bit because it's getting quite serious. All right, what else? I think that's about it. let's see. Casey Dots, is there anything you wanted to look at? I've got a couple of tickers, got a few tickers that some people DM'd me. So we got some other charts to look at, but want to see if you guys, if there's anything you want to see first. So if there's anything you want to see, you can unmute and let me know, or you can type it in the chat. You guys know the deal, so just give you a sec to type anything in, or start talking to me if you want. Or I could just sit here and enjoy my beer. Okay. Okay, Casey Dot says PSEC have had it for years as a dividend stock. Okay. I haven't heard of this one. Let's take a look. PSEC. Prospect Capital Corporation. So sounds like a financial to me. Dividend 6 cents on a $6 stock, so 1%. Oh, 6 cents every quarter. So then that's about a 4% yield. And that yield has gone up because the price of this has come down a couple of bucks. Okay. All right. So yeah, Casey Doss is added. He says, they say, sorry, now underwater, can't believe it. Guess because I reinvest the dividends. Yeah, you know, that's kind of one of the unfortunate things that happens with dividend stocks. You know, when it, and you know, I mean, this doesn't pay an outrageous dividend or anything, but you know, 4% isn't that high either. Let me confirm that yield. Oh, wait a minute. Yield 11. Well, that's interesting. It's telling me the dividend yield's 11% on this. Why was it only 6 cents? Oh, is this 6 cents every month, not quarter, right? Yeah, okay, that's how I screwed that up. All right, sorry. Okay. You know, it's in a bear market like this, as we've seen with utility, we just saw with utilities, right? Everything comes down. They sell everything. There are very few stocks that are going up. So, you know, it shouldn't be surprised that these dividend payers, you know, this is obviously a good company. It hasn't come down that much really, which, you know, so that shouldn't surprise you. Now, I would have thought that it would have found support at this area here. You know, we've had this, you know, we had this big consolidation here, and it's a little surprising that it got down, you know, below that. In fact, I'm going to mark that in as a major support resistance area. Okay, and then the top of that range should also be, and where is that? You know, about $7. That makes sense. Another major support area. And this looks pretty important here. I'm not going to put that one in as a major though. For that pivot right there. And yeah, at about 575. Okay. I think that's enough levels for now. So you can see that, you know, we broke down. So this level ended up being what, about 623. Okay. So we broke down through that level and immediately retook it. That's quite bullish. That, you know, that's good. You really want to see that when it breaks down through an important level, instantly retook it. That's great. But it's kind of put in a bit of a bear flag, or sorry, actually, this is a bull flag. I guess, you know, if this is the uptrend, only 3 days long, you know, it's a bit of a bull flag. Messy, wouldn't count on that very much. But even, you know, as this came down again, it didn't even get down to that level this time. It put in a nice hammer candle there. Let's zoom in a little bit more. Not a hammer candle really, but a doji, and moved up a little bit here. When are earnings coming on this? Not until about a month away. Okay. Looks to me like this will probably turn up from here. You know, this seems like a pretty decent area to have a bottom. If this level should break, you want to watch these three lows right here. It's also nice to see that it kind of put these lows in at pretty much exact. Whoops, that's not what I want. Put those lows in at exactly the same spot. So that's good as well. So get a little bit of line in there. All right. Yeah, I wouldn't be surprised to see this go up, but I mean, we do have to be aware it's in a long-term downtrend now. It's in an intermediate-term downtrend, so we've got to be really careful in this. Now, see, you've added another question, and Casey Dust is now asking, should I turn off reinvest for the dividends during the bear market? I would be inclined for something like this. I would be inclined to say no, and not, you know, especially at this point. Maybe earlier in the bear market would have been a good time to turn it off. You know, like perhaps when the downtrend accelerated. You know, for instance, if you draw a line across there, say down to here, right? Actually, let's move this over to here. So you can see there's a couple times that this downtrend has accelerated. So if we went from here to here, for instance, right? And you can see, well, we couldn't even come up to that previous high. You know, so we would adjust our downtrend, right? And then again, you know, we put in a lower high, and then we put in another lower high. But the slope of the downtrend wasn't too bad, right? But then you can see the downtrend here really started to accelerate. And that's when maybe, you know, as it started to pull back really quick, maybe in here might have been a good time to turn off that reinvestment for a short time. Certainly when it put in this bear flag right here, you can see so you've got a bear flag here. And you know, when this was forming, I probably would have drawn that something like this. And it would have gone, oh, hey, look at that. It broke out the top of that bear flag. Awesome. But then 2 days later, it failed, right? And that's when I would have got afraid. And I would have extended this line across like this. And once it broke down out of here, and you can see it tried to hold and then it couldn't. And then look how fast it dropped after that. This is people, you know, when it couldn't hold this anymore, that's when people gave up. And that was sort of the last resort to give up on this. And so that's, you know, there were other signs. There were signs earlier in here that maybe you should have given up on it. But I think that now, as long as we're above these two support levels here, I think you should probably just leave it on, because, I mean, you probably know my long-term outlook on this market is we are very near the end of this bear market. I really feel it's coming. I really feel that everything right now is so negative, and that's the way bear markets ends. You know, everything, you can't see a way forward out of the bear market. Everything feels so negative. Everything's a disaster. The world is falling apart. It's coming to an end. We're going to have World War III. We're going to have, it's not even going to be a recession. It's going to be a depression. This is all the stuff we're hearing right now. And it's exactly the kind of stuff you hear at the end of a bear market. So that's sort of the place I come from. So when I see people wanting to sell out of things now, I'm saying, well, we're at important support level. We've got these catalysts coming, and everything just seems too bearish. And we're also, there are strong seasonal tailwinds, you know, behind us. You know, October is generally a turnaround month. October is they call it a bear market killer, because, you know, bear markets tend to end in October. We've also got midterm elections, and we tend to see strong rallies after midterm elections. We also tend to see strong rallies when a political regime shifts to being all one party controlling everything, you know, in this case. And it happens with Republicans too, not only Democrats. I'm apolitical here. But you know, we've got a Democratic president, a Democratic Senate, and a Democratic House. When there's no division of power, the market doesn't really like that. If the Democrats were to lose either the House or the Senate, and it looks like they'll certainly lose one of them, if not both, then we have division of power. And one party cannot take complete control and do whatever they want. The market loves that. The market kind of loves gridlock or loves political gridlock. They love a government that doesn't do anything. So we've got that coming too. So long story short is, no, I don't think you should turn off your reinvestment yet. I think that I think it's just showing a little bit of strength here, and it's also showing that there, even if it does come down, it's not going to come down much farther. So really, you know, if you're like me and you believe we're near the end of the bear market, well, you actually kind of want to be buying more almost, right? This is a good time to be buying if that's the case. Now, I'm not suggesting you run out and just, you know, add a ton to this or anything. You know, maybe if you can break through and hold through this accelerated downtrend line, yeah, maybe that's time to add some. But right now, I'd say status quo is the way to go on this one. And yeah, that's all I got on that. So, oh yeah, you're welcome. You're welcome. I'm glad that helped. Okay, does anybody else in the chat, anybody else is here with us, have anything they want to look at? If not, I'll move on to my list. I've got a couple here for Brownies from the Discord. So let's, one of them is, I've got to use, TradingView for it because I don't have data. I don't have data for this exchange. So this is LVMH, Louis Vuitton. And this is on, I believe this is on the Paris exchange. I'm pretty sure that's where he's holding it, so I'm using that. This is available as an ADR, I think, on the pink sheets, if you're at all interested in this. Okay. Okay, Casey Doss says, I was curious what your thoughts are on over-the-counter stocks. Was looking into Louis Vuitton as well. Yeah, you know, I'm not a big fan of stocks that have 5 letters, over-the-counter stocks. It can be really difficult sometimes to get in and out of them. They don't trade the same. You're almost always trading against a market maker. So you've got to be really careful going in and out. I'm not sure what kind of volume Louis Vuitton, the over-the-counter one does. I'm not even sure what the symbol of that. Do you know the symbol of that by any chance? You can maybe type that in the chat. We'll look at that after we look at this on TradingView here. So yeah, I marked this up a little bit after Brownies DM me. This thing has been in a monster uptrend. And you can see one of the things that I really like. So long story short here is I really like this stock. I like this stock long term, obviously. I mean, who wouldn't, right? But one of the things I noticed that makes me like it is obviously it's in a really nice uptrend, and we come down, we test the trend line, and you know, here's the COVID, right, and it immediately went back up again. But it comes to that tested trend line and it goes up. And this trend line has been very well behaved so far. Also, we get these periods of consolidation. Now, they can last a little longer than I'd like. Like this one here in 2015 was, you know, 2 years long. That's a long time to be holding something going sideways. But you can see, you know, we have these sideways consolidations. And then we break out of them and we make another leg up for a year or a year and a half. And consolidate again, break out of it, move up to the next level. Nicholas Darvis, would call these Darvis boxes. He loved this sort of thing, right? He would look for this and he would get in these and he'd try and actually, he would just basically hold it to the next level. And when he saw it start to consolidate, he'd get out and then he'd buy the breakout and get in again and try and, ride that up to the next level. So, this is good. This is healthy price action in something that you can hold very long term. You've got to be patient through these sideways consolidations. So if you're not a patient person, this stock isn't for you. But it is a very healthy price pattern. So where are we at now in this? Let's just zoom in a little bit. So you can see we're in another big sideways consolidation. We've been in that for over a year and a half. We have come down. We've put in 1, 2, 3, 4 lows here. So those are nice solid lows, right? And you can also see there's a support and resistance. We've got levels within this, right? This kind of consolidation is actually almost broken up into 3 consolidations. We've got this sort of upper consolidation zone, we've got this middle consolidation zone, we've got this lower consolidation zone. Now the middle consolidation zone is kind of catching up to the uptrend line by going sideways. So it seems to me that you could do worse by buying at this support level in around here and around 600. I imagine, I don't know if that's francs or dollars or what that is, but on this stage, it's 6. It must be francs, right? This is on a Paris exchange. It's held pretty well. However, the market is pretty scary right now, and maybe this isn't the time to really be buying anything unless we can kind of see a turn in the market, a turn in the fortunes in Europe. Then maybe you get in. So this stock absolutely a hold without a doubt. And I know Brownies in it long term, and he's a young guy. I could see him holding this the rest of his life, and if continued on this uptrend the rest of his life, he'd be rich just from this one stock alone. Obviously, downsides here is this downtrend breaks. If it was to break down through here, I'm almost positive this support level here would hold. Actually, I should probably get that in. Let's take this from over here because it looked like it picked up right there. Yeah, there it is. See that? Look at that. Awesome. Yeah, I'm sure this 543 area will hold if there's a break in this downtrend. At least hold initially, right? If we get into a market crash situation, then that kind of changes things a little bit. But yeah, I'd almost be looking for an area you could add more to this because I really like what I see in this. Just you got to get the timing right. And I don't think it's exactly the right time now. I'd like to see a better setup in this. And maybe one of you guys, either Casey Doss or Brownies, can sort of remind me if you see something you think looks like a good setup, let me know. Like this consolidation here. So this is like this is a bear flag right here, right? Because we're in a downtrend. It comes down and it starts going sideways, but it's sloping downward. And downward sloping. Whoops. Oh, turn on the magnet thing off. There we go. Sorry, I'm not. I don't use TradingView as much as eSignal, so I'm a little slower with drawing. Okay, so you notice how we've got this downward sloping bear flag. We expect that to fail. Failing here in this case means it goes up, right? And it's exactly what happened. Now this turned around quite quickly, but again, it came right down to that line. See that? Came right down to that line and bounced from there. Again, this is all just healthy, positive price action. This is doing well in a bear market. So that's what I've got to say about that one. I don't actually, Casey or Brownies, I think. Where did he message me? Here. I think he gave me that that ticker. Well, maybe I can find it here. LVMH. Yeah, so that doesn't look quite as nice. I'm going to move this one over into eSignal. the So this is the owner over-the-counter version of what we've just been looking at in the US. So I think that what we're seeing here, the reason this doesn't look as nice is probably, currency. The currency is definitely having an effect. The strength of the US dollar is causing this to pull back more than the French version of this. But we get more data on this too. Okay, this is interesting. Yeah. You do not want to get in a situation though where you've got this, from 2010 all the way to 2017, a 7-year consolidation. You don't want to see that happen again. But again, you can see here, I mean, this looks similar enough. It's just that I think that the uptrend might have broken. The uptrend is looking a little bit different to me. I think we went here on the French exchange version of this, and you can see that trend line is kind of breaking here, and it is definitely consolidating lower. So yeah, you can see why Brownies probably bought this on the French exchange, because it definitely looks healthier there. Yeah, I don't like it for anybody who wants to buy it in US dollars. I think this is a wait. Yeah, I'll have to look at this some more, but we spent a lot of time on this one stock, so I think we'll move on from here. What else do you want to? Oh, Celsius. All right. Zoom in on this because all the action's up in this part of the chart. All right, so we came out, we made an all-time high, and we are still pulling back from the all-time high. Not pulling back too quickly, but it is, it pulls back, consolidates, pullbacks, consolidates. We had a really minor pullback, and now we're consolidating again. I mean, maybe that means, we're nearing a bottom of this pullback, and we can start moving up again. None of this price action looks terrible, especially considering the market. I mean, this thing is totally outperforming the market. It's probably still outperforming the market. What is this? Oh, so this is a consumer staples, eh? Interesting. I want to do a relative strength analysis on this one. So we'll throw Celsius in the top pane of this. We'll throw staples in the middle pane, and then down at the bottom. So yeah, you can see here. I mean, you don't have to. You can see how it is been outperforming its sector, and it was strongly outperforming. But that it's that performance has started to roll over a bit. Let's take a look at it here. In the bottom pane, I'm going to. We can see a direct relationship of the two. So when this chart is going up, Celsius is outperforming, and you can see we started to underperform its sector just a little bit. But I'm sure that Celsius is still outperforming, like SPY, for instance. It's outperforming the market. Tiny bit of underperformance for a little while. It's funny, while the market was rallying, Celsius was underperforming, and now that the market pulled back the last few days, Celsius is outperforming again. So, I mean, this is still a very healthy stock. None of this scares me. I mean, it is quite a pullback, though, from what was the high, near almost 120. Came down to a low of like 83. Wow, that pulled back a lot, actually. But considering how much the market has pulled back, this isn't so bad. Got good support in this area. So yeah, I guess we should get this line in here. Lots of support in around there. Lots of support down lower too. I would actually be quite surprised if this goes much lower here. I really feel this is about to turn up from here. Not really a pattern here. I guess actually you could, today would actually been a good day to get in it. I should have looked at this earlier today. I just saw it mentioned it, and I didn't even look at it. You know, half decent hammer candle yesterday, and it broke out above the top of it today. So one of the ways, you know, you can play these, or I play these on occasion, is when you see a bit of a consolidation at a support level, and then you get this hammer candle, you can just go ahead and buy, you know, a breakout above that candle, and then you put your stop below it, you know, just in down here. So, you know, go with an appropriate size for that amount of risk, and you know, you're off to the races. And here, what we expect to see happen is we expect this gap to close. Well, this gap is already closed. Actually, going to get rid of that. That gap has been closed, but you know, we expect to see this move higher. Maybe we come into resistance here and stall out. But if we get some momentum, this should be able to get through this resistance fairly easily, and then go up and test, you know, these resistance levels higher up. So yeah, it's you know, looking good there. All right. I got another one for Just, who couldn't make it today. So if you've been watching the Ticker Talk, you know that Just and I have been talking quite a bit about WWE, the World Wrestling Entertainment. Here's the long term on this to give you some context. Let's actually go way back so we can see where we got this resistance level from. This 92.77 area as resistance, and then this all-time high. I'm gonna mark that in. I should mark that in. All-time high from up here. Zoom in so I can make sure I'm right on that level. Yeah, that's perfect. Okay. All-time high in this, $100.45. So we're coming into a resistance level up and around this 77, 78 area. And I know that Just has been taking some off as we come into there. It looks like the upward momentum has slowed a little bit in this. But it's still trying to climb, right? But you can see that, you know, the upper part of you can see how the how this is rolling over a little bit here, right? And that's sort of like, you know, this would be sort of the beginning of a rounding top sort of thing. I'm not suggesting this is topping. This still looks like incredibly strong, but it is losing upward momentum. The highs get a little lower each time, right? But the lows are still climbing, you know, up nicely. So, you know, we came up, we had a nice move. We had a bit of a consolidation that looks like it's trying to go higher, but had some trouble today. You know, if I were in this, I mean, having, you know, knowing that Just has taken a bunch off, if I had taken a bunch off on this, I'd be holding a taster in this. I'd be holding a piece. And I'd probably be getting in on, you know, if this moved down farther, I may be getting back into it down in here somewhere too. Tough to say on that one, but I would definitely, I'd be unhappy if I sold everything out of this, because I think there's, you know, there's still room for this to go higher. So that's what we got on WWE, and I have run out of tickers. So does anybody else have anything they want to look at? Marvin, is there something you want to see? Okay, I guess not. In that case, let's start wrapping things up here. Let's see.
Yeah, sorry, Kevin.
Here he comes.
Kind of take my students on a trip around the world.
Yeah, I was balancing. It was still kind of figuring out, finishing up some stuff from work. But no, actually, I don't. I mean, I've marked up some charts, but I don't. I'm just waiting to see what's going to happen tomorrow.
Of course, as you should, right? You know, it's like,
yeah.
You know, I'm kind of like, I've seen a couple of things that are maybe kind of sort of set up, but the problem is, I just suspect that if, you know, for these setups, and they're long side setups too, right? So if they work, they're going to be big gap ups tomorrow. That's how
exactly.
And then that means they don't work anymore. So So that's why I didn't really show anybody any decent setups, because I just don't think they're going to be decent, tomorrow if they actually work. It's just so hard to buy a big gap up, right?
Yeah.
So I don't want to put people in that situation.
Yeah, like I was looking at Walgreens because I know I think they got earnings tomorrow. And I kind of marked out a chart, and I was just like, man, I probably could. Actually, was going to play a put today, and actually because I marked out levels and it hit all of my levels like to a T, which is great. But I was just like, I don't want to. I'm gonna wait before I do anything to see what happens tomorrow.
Yeah, I mean, a put is something you certainly wouldn't want to hold overnight in this. But if you're playing the put intraday, that's fine. But buying a put on the last day before earnings, on a day that the market's down and volatility was spiking up a little bit, really expensive. And then tomorrow, who knows? I mean, earnings is such a crapshoot. It's a coin flip.
Yeah, and I've noticed their past few earnings, although they beat their earnings, I don't know if any of you can tell on your charts, like, I don't know, they gap down hard just about the last few earnings.
The last gap down hard. In fact, one gap down, two gap down.
That one gapped down a bit too, just a little.
It went down for a day, then it went back up, but then it just rolled right over after it.
Yeah, right. So I was just like, man, this would be. But I was just like, and then if say the numbers come out tomorrow morning and people are like, the market reacts favorably, then whatever it's probably going to rally and roll just with the rest of the market, even regardless. So I just kind of like this. I feel like tomorrow. I think I don't know. I feel like even the market itself is kind of just people are waiting to see.
Yeah.
And riding, and so it's like, wow, I'm not, and there's no need me take no chances, even with it.
You know what you should do. I wouldn't have worked so much here, because you know that implied volatility shoots up on the way into earnings, right? And I'm going to show you. Just give me a sec to pull something else in here. Yeah, here we go. Cool. This will work. Hopefully there's no sensitive data on this screen. All right.
Data connection lost.
So this is implied, but this is a chart of implied volatility for WBA, Walgreens. Okay. So what happens is you're coming into earnings. A lot of this volatility is just from the market volatility going up, right? What happens is a couple of weeks before earnings, volatility will really start to go up. And you can see that happening here. So when was this? October 4th. So, okay, so this is a week. Is it today? The 12th or something, isn't it? The 4th?
The 12th.
Just over a week ago, we can see the volatility starts to spike up. And so when was the earnings before this one? You can see the date now. There we go.
July. July. I mean, June 30th. Sorry.
July 1st. Yeah. Okay.
Yeah.
They're pretty much
March 30th. March 30th, April 1st, June 30th, July 1st. Yeah, around that time.
Let's look at those. So July 1st. So that's interesting. Volatility came down into that one. But anyway, so one of the ways you can play this, and this might actually work really well on Walgreens, because it does seem to have this pattern of like gapping down right on earnings, right? The problem is that volatility is going to get sucked right back out of that.
Right.
So what you want to do is you want to get in, you want to buy your put before this happens. Buying your put like a week or two before earnings is the way to go. And then you just hold on. And, if it goes up a little bit like this or whatever, after you buy it, don't worry about it, because, you just got to suck that up, right? If you want to be a little more risk defined in there, you could do it as a spread even. But yeah, whenever you want to play something for earnings, you kind of almost have to do it 2 weeks before. And then there are other things you can do. You can do like a calendar spread. You can do a calendar spread, say starting actually 3 or 4 weeks before, to take advantage of volatility, but that's a little complex for our discussion right now. Maybe Google calendar spreads and earnings, and you might find a cool little strategy for getting yourself set up for playing earnings. But yeah, that implied volatility thing, it'll every time, because all that volatility comes out tomorrow right after earnings, even if this gaps down. So you can be right, this can gap down a lot and still lose money on that put.
No, that's helpful, Kevin. Thanks, man. I appreciate it. Yeah, like I said, I was just, yeah, let me wait till after tomorrow.
This does look like a good one though. This consistently comes down every earnings.
It does. That's why I was just like, oh, okay.
Yeah, I don't know if you. Yeah, okay. So that is that on Walgreens. So was there anything else?
Yeah, no, like I said, that was that, and I was just looking at the VIX chart because of a news article. So that's all I've been looking at. But like you said, but that what you gave me there in terms of looking at Walgreens, that was helpful.
Good.
In terms of that spread, yeah.
Cool. All right. Well, thanks for coming. Next week we're going to do ticker talk again next week, and I've got the weekend videos, of course. So I think that's it for me. So thanks for coming out, everybody. Thanks for watching. If you're watching the recording, hit that like button, subscribe, do all that YouTube stuff. And we will see you all again. We'll see you on the weekend. And we'll see you live next week. So have a great night.